Hello traders, and welcome back to Explain the Charts. Today is November 26th, 2025, and we are doing an in-depth analysis of USDCAD, the US dollar versus the Canadian dollar. This pair is at a fascinating juncture, coiled up near multi-month highs, and in this video, we'll unpack both the fundamental news and the technical picture to see where it might be headed next. We'll start with the news and then move into a multi-timeframe analysis of the charts. First, let's look at the fundamental picture, which is overwhelmingly bullish for this pair. News reports highlight a persistent positive bias for USDCAD, driven by two core factors. Firstly, crude oil prices have been sliding, which directly undermines the commodity-linked Canadian dollar. Secondly, the US dollar itself remains broadly bullish. A major theme for 2025 is the monetary policy divergence between the Bank of Canada and the US Federal Reserve. The Bank of Canada is expected to continue easing interest rates, potentially at a faster pace than the Fed, which puts downward pressure on the CAD. Adding to this are political uncertainties in both nations, which can increase risk-off sentiment and further boost the US dollar's safe haven appeal. Essentially, the macroeconomic backdrop strongly favors a higher USDCAD exchange rate. Now, let's turn to the daily chart to see how this narrative has played out. The first thing you'll notice is a powerful and sustained uptrend that has been in place since the middle of 2024, taking the price from lows around 1.34 all the way up to our current levels. We've seen major resistance established near the 1.4400 level, which was tested back in late 2024 and again in early 2025. This 1.4400 to 1.4500 area represents a significant psychological and technical ceiling for the market. It's also important to note some days on this chart show extreme wicks to the downside, which appear to be data errors or flash crashes. These candles were immediately bought back up, but we will focus our analysis on the more reliable open, high, and closing prices, as these anomalous lows are not indicative of true market structure. After peaking earlier this year, the price saw a healthy correction, finding support before resuming its bullish trajectory in recent months. This long-term trend is undeniably bullish, and traders have been consistently buying the dips. Let's zoom in on the price action over the last few months to get a clearer picture. After bottoming out in early September, the pair began a strong rally, breaking through previous resistance levels. October was characterized by a period of consolidation, mostly trading sideways as the market digested its gains. However, early November saw a significant breakout to the upside, a move strongly correlated with the fundamental news of US dollar strength we just discussed. This rally stalled around the 1.4100 to 1.4130 area, which news reports have correctly identified as a key swing area and short-term ceiling. Just last week, on November 21st, the price hit a high of 1.4131 before pulling back slightly. We are currently consolidating right below this critical resistance zone. The nearest significant support on this daily timeframe sits around the 1.3980 level, which was the low from November 19th. Switching over to the 1-hour chart, we can see this recent consolidation in more detail. This is a classic example of a market pausing after a strong upward move. For the past several days, the price has been trading in a relatively tight range. We can clearly define a resistance zone between 1.4110 and the recent high of 1.4131. On the downside, support has been established in the 1.4085 to 1.4090 area, which has been tested multiple times and has held firm. This range-bound action suggests indecision, as bulls and bears battle for control. Traders are likely waiting for a fresh catalyst, perhaps upcoming macro data from the US or Canada, before committing to the next directional move. A breakout from this channel will likely dictate the short-term trend. Drilling down to the 15-minute chart gives us an even closer look at the current price action. Here, we can see the choppy, sideways movement very clearly. The price has been oscillating around the 1.4110 level for the past several hours without any real conviction. This timeframe confirms the consolidation we saw on the hourly chart. While useful for scalpers playing the minor fluctuations within the range, for most traders, this view simply reinforces the need to wait for a breakout. The market is building energy, and a break from this tight consolidation could be sharp and fast. So, to summarize everything we've looked at, let's recap the key levels and potential scenarios. The long-term trend is strongly bullish, supported by favorable fundamentals for the US dollar. Our most critical immediate resistance is the zone between 1.4110 and 1.4131. Immediate support lies at the 1.4085 level, with stronger daily support at 1.3980. The major, long-term resistance target for bulls remains the 1.4400 area. Now for the potential outcomes. The bullish scenario, which I believe has about a 70% probability given the context, involves a decisive break and hourly close above 1.4131. Look for an increase in volume on the breakout to confirm its strength. If that happens, the path is open for a continuation of the uptrend, with the next major target being the highs around 1.4400. Conversely, the bearish scenario has about a 30% probability. This would involve a failure to break resistance and a subsequent break below the 1.4085 support level. A confirmed break below the stronger daily support at 1.3980 would signal a deeper correction is underway, potentially targeting the 1.3850 area. This would likely require a significant shift in the fundamental narrative, such as a sharp rally in oil or unexpectedly weak U.S. economic data. Thank you for watching this analysis on USDCAD. Keep a close eye on those key levels we discussed. As a final reminder, this video is for informational and educational purposes only and should not be considered financial advice. Trading involves risk, and you should always conduct your own research and due diligence before making any investment decisions. Good luck and happy trading!